Property prices across the country have increased for a sixth month in a row, with a lack of supply continuing to squeeze the market. The National Home Value Index from CoreLogic shows a rise of 0.8% last month, compared to 0.7% in July. Prices have now jumped for 6 consecutive months and are up by 4.9%, or just over $34,000 since February. So of the capitals, Brisbane had the highest increase in home values for the month of 1.5%. That was followed by Sydney and Adelaide with 1.1%. Canberra reported a modest rise in August, while Hobart was the only capital to record a slight fall. The median value of a home in Sydney is now just under $1.1 million. That is up by 1.2% over a year. That's followed by Canberra at more than $830,000, then Melbourne and Brisbane, with a home in Darwin now valued just under $500,000 on average. Well, CoreLogic says it is generally house values rather than units that have shown a sharper recovery trend within the capital cities. Across regional Australia, properties are now up 1.6% since February. Meantime, the National Rental Index jumped last month by 0.5%. That is the smallest monthly rise since November 2020. The annual increase is still 9%, almost 3 times the average over the decade. Rental vacancy rates continue to tighten. CoreLogic data shows it fell to 1.1% in the capital cities and 1.4% in the regions. When it comes to the annual change in rents for units, the pace of the increases are easing, apart from Perth, where rentals are up 16.4% over the year. Well, the head of research at CoreLogic, Tim Lawless, says he was expecting this increase.
We've been seeing these trends evolve over the past 6 months. In fact, this is the 6th month of consistent rises across the Australian housing market. But we are seeing some increased diversity here, especially in some of the smaller capitals where they're best described as, say, flat to falling in Canberra and Hobart, whereas other markets that are really benefiting from very low supply levels against strong demand, like Brisbane, Sydney, Adelaide and Perth, are still seeing values rising very quickly. And it looks like that is a trend that is quite entrenched.
You mentioned lack of supply being part of the problem. What sort of levels of supply are there out there?
Well, interestingly enough, through winter, we have started to see an increased flow of new listings coming on the market. That's quite unusual. Typically through winter, it's generally a falling to a steady trend of new listings. But overall supply levels, or at least available or advertised supply, is still nearly 20% below the previous 5-year average across the combined capitals. But there are some markets, again, Hobart and Canberra, to a lesser extent Melbourne, are key examples of capital cities where we're now starting to see total listing numbers getting sort of around that 5-year average level, if not above it. So some markets are starting to see a rebalancing in supply.
The surprise, I guess, is the mortgage stress that people are under. So to see house prices going up when interest rates are as they are, I mean, what are you looking at going forward here and how that will impact prices?
Absolutely. And this is quite the, I suppose, the unusual situation where we have very high interest rates, very low consumer sentiment, and as you say, probably rising levels of mortgage stress, yet housing prices are rising. And I think this really reflects just that underlying imbalance between supply, which is very low, and demand, which is roughly around average levels. It's not like demand is shooting the lights out. But it does look to me as if the second half of the year is probably going to be characterised with a bit of a slowdown in the rate of growth, simply because we do expect supply levels to gradually rebalance through spring, which is normally quite an active time for more stock coming on the market.
That's interesting, Tim, because we've been talking a lot about the cost of living stress with inflation the way it is. The demand, as you say, is not reaching the peaks. So is it going to be that the prices are the height that they are at the moment, but actually the buyers aren't going to be there and many will sit there not being sold?
Well, I think that's probably the best case scenario, that listing numbers will probably rise, giving buyers some more choice. But we're not expecting buyer demand to rise materially until interest rates start to come down, mostly because there's still a lot of barriers for buyers to get into the marketplace, particularly around accessing credit at a time when interest rates are high and they're being assessed to repay their mortgages 3 percentage points above the going mortgage rate.
Yeah. Let's talk about rental markets then. What does the outlook tell you?
Well, rents, thankfully, for renters are starting to ease a little bit in the rate of growth, generally not coming down, although there are a few examples where rents are falling. For example, in Canberra, it looks like Hobart is heading for an annual decline in rents as well. Nationally or across the combined capitals, we're still seeing rents rising at about 9% per annum. That's nearly 3 times higher than the long run average. So even though rents are starting to slow a little, it's happening against this backdrop of extraordinarily low vacancy rates. And I think that the reason we're seeing rental growth slowing simply comes down to renters probably approaching a ceiling on how much they're able or willing to pay, and forcing a restructure in household sizes as group households reform.
Well, for more information on the housing and rental crisis, you can catch a special investigation. It's from Casey Briggs and our team of foreign correspondents. It's What Broke the Rental Market. It is available to watch right now on ABC iView.